Welcome back. It's time now to take a look at the top business stories. Dubai government fund for stalled developments finances first project. GCC countries to invest $252 billion in energy sector. And British ex-military vehicles, good defensive investment. Let's look at the equity markets first. Dubai's DFM General Index fell slightly today by 0.1% to close at 1,555 points. Arab Tech Holding dropped 1.8% and Drake & Skull fell 0.9%. Jewelry maker Damas dropped 5% despite reaching a debt restructuring deal with its creditors. Emaar Properties gained marginally by 0.3% despite surprising the market with a 10% dividend, the first payout since 2008. DP World fell 0.8%. 184 million shares were traded, valued at 284 million dirhams. And over in the capital, the ADX rose only slightly by 0.04% to close at 2,634 points, with the real estate sector posting the largest gains. Alder Properties rose 1.3%, Sura Real Estate gained 3.3%, and RAK Properties, on the other hand, fell 2.6%. Etisalat was down 0.5%. The banking sector was up. Abu Dhabi Commercial Bank rose 0.4%, First Gulf Bank was up 0.3%, and Bank of Sharjah gained 2.2%. 98 million shares were traded, valued at 160 million dirhams. Like the UAE equity markets, the GCC countries' main benchmarks ended mixed today. Yet another day, Egypt's stock market is making a strong comeback. Take a look. And now to our top stories. A Jumeirah Lakes Towers project is the first development to receive funds through a Dubai government financing program to aid stalled projects. The government set up the Taizeer program last October, which aims to boost investments into halted developments via the help of local banks. The Al Mana development in JLT will receive 65 million dirhams from Mashreq Bank to finish the lakeside residence, according to the Dubai Land Department. The department said that funding for projects with the highest possibility of completion are the most likely to be included in the program. It is hoped that the Taizeer program will restart as many as 48 projects by helping to raise 5 billion dirhams of financing. Banks are shifting their attention towards the money transfer markets by offering attractive remittance deals to their expat customers. Officials say they have identified a gap in the market, which is currently dominated by exchange houses. Up until now, most banks charge their customers fees when sending money home. Some, though, now have waived fees to attract new customers. Standard Chartered, for instance, recently waived all online remittance fees to India until May in a bid to attract more deposits from its Indian customers, a country that holds the largest recipients of remittances in the world. The GCC countries are looking to spend up to $252 billion into the energy and power sector in the next couple of years. Qatar is set to lead the way with plans to spend $125 billion on construction and energy due to resilient crude and gas prices, which generate steady income from the country. Qatar is followed by Saudi Arabia, which will spend $100 million, of which a third will go towards power plants and the rest for distribution networks on the national grid. According to officials, Saudi is looking to increase its power supplies to help boost economic growth. It is seen rising by around 8% annually over the next 5 years. And in our fast financial news, Emaar Properties unexpectedly declared a 10% cash dividend on Monday at the developer's 13th annual general meeting held in Dubai. Its shares surged 0.3% on the DFM today as investors were happy to see the return of a dividend payout. Emaar initially had tried to prevent, reason being that fourth quarter net income tumbled 62%. At its AGM, Emaar said it will carry on with activities relating to real estate. Jewelry retailer Damas reached a final agreement with all its lenders and completed the restructuring of its $872 million of debt. All 25 banks approved the deal. Ibrahim Belsela, chairman of Damas' board of directors, said the company is now working towards restructuring its operations to support growth. And after the break, we'll run you through what's making the headlines in international business today.